All right, forex traders, welcome to yet another weekly forex forecast. And as you know, we are always going to be breaking down Euro USD pair. So last week, according to our forecast, we are anticipating a drop on Euro USD, which we eventually got from our 05 Fibonacci level that we spoke about last week. So if you're able to profit from this trade, congratulations, and let's dive into what we're expecting for the new week. So Euro USD last week, just to do a quick recap of what we said last week and what actually happened in the market last week. So I said that from this our 50.05 fib level, which was from the recent swing high to the recent swing low, we are anticipating that the market would come into this 05 Fibonacci level and drop, which the market did exactly what we're expecting. So now that the market has dropped and come into this our take profit level, if you were watching our previous um if you're watching our previous forex forecast on Euro USD, you would notice that, or you would know that this level here, which is our 0.27 level here on our fib, is our take profit level. So for those who were able to capitalize on this trade, I'm sure you guys already made money trading this market last week. So we are going to be looking at, okay, what should we be expecting from the Euro USD going into the new week, and how should we go about placing our trade if there's any that's going to be popping up in the market. So now let's take this off of my charts. So last week, sorry, let me just drop this and put this back. Sorry, and put this. Okay, so last week, yes, we anticipated the market to drop with the announcement of the new Fed chairman and also holding interest rates. We got DXY flying to the upside and Euro USD dropping to the downside. So this is a very critical level that we need to be careful while trading. Why is this a critical level? Because when you look at the 1 week time frame, and you look left, you will see that this level is a level that has constantly or in the past has been rejecting any break below. You can see the first rejection here, we can see the second rejection here, we can see the third rejection here, and we can also see that this is the fourth attempt that the market is making towards this level. And you can see what happened last week is that we came in below this level and closed above this level. So that is a very strong indication that we need to consider while looking at trading opportunities for Euro USD going into next week. So this is a strong level, and I would advise that before you take any trade on the Euro USD, you need to first of all wait for a confirmation of a break below this level, because as you can see in previous times the market has always rejected off of this level, and this is a big massive consolidation sideways movement that I have been praying that this market will break and finally give us a weekly bearish trend. But when we also look at the Euro USD on a daily time frame, when we look at the Euro USD on a daily time frame, what we can see is that, if you guys remember very well, let me zoom in a little bit. If you guys remember very well, I said something like we have a head, left shoulder and right shoulder pattern, which is an indication that we are going to be going lower, which we have been going lower, giving us the lower high, lower low, lower high, lower low, lower high, lower low, lower high, and now a lower low. So now if this daily trend is valid, we should be anticipating a push or a continuation to the downside, because now we have a overall chart pattern which is showing us that there is an inverse head and shoulder pattern, which is a reversal pattern. We have the neckline, which the market is currently at the neckline of this head and shoulder pattern. So what happens at this neckline is very critical. If we decide to break below this neckline, then this head and shoulder pattern is very much valid. But if we decide not to break below this neckline, then we want to start looking for more we need stability for the market to indicate or give us a more concrete buying opportunity. So this is a very vital level. So let's break it down into bits. So judging by the trend of this market here, where the market is making lower lows, lower high, lower low, lower high, lower low, lower high. If we decide to zoom in a little bit and draw out our Fibonacci level, just like we did for the previous low and previous high, to the recent high, from recent high to recent low, what would we actually be expecting next week is the market to come into this level here. We would be expecting the market to come into this level here, which is our 50 fib level again, to now give us a much bearish move to the downside. So if Euro USD comes into this level, this 05 level here, and pushes to the downside, then that means that this sell trend is still very much in position in accordance with this overall chart pattern that we can see on a weekly time frame. But if we come in here and break below this sell trend, this 50 fib level, then we can start getting ready, or we can start making up our minds that this bearish pattern is about to be over if we take out this sell trend line. As you can see, we still have a sell trend line that is guiding the market. So we need to first of all take out this sell trend line before we can confirm that we are actually going to reverse, that is going back bullish. But for now, we are still very much bearish. As you can see, the market has been trending lower low, lower high, lower low, lower high. So I'll be expecting the market to put in a lower high around here, then a rejection to attempt to break this this level, this critical level that the market has failed to break in the coming week. So if we can get that from Euro USD this week, then we can start looking for a much bearish opportunity, or a sell opportunity in the market going into next week. But I doubt that the market is going to just come in here and break next week. I think the opportunity for us to actually jump into this trade will be upper week.